Okay, I think we're good to go. So my second hello. Hi everyone, it's Grant. And I head up business development here at Stitch. And I'm excited to chat to you and really explore the topic of how better money movement enables online businesses to scale faster. And I think to introduce the topic, it would be good to just share a little bit of context around why we have selected this as a theme. And essentially what we'd be looking to explore today. So there's a little bit that we've looked at and essentially prepared around this. And if you think about money movement and essentially enabling money movement, there's many different partners across the value chain, right? We have banks, we have financial institutions, we have fintechs, we have regulators, and there's all these different partners that you need to consider in what that value chain essentially looks like. We have different functions of payments, right? So you have pay-ins, payouts, cross-border settlements, and all of these play a part in essentially this money movement engine, right? And I think what this means in a local context within the local market is if money moves better within your market, it also makes it more appealing for international businesses to want to trade within that market, and it makes expansion opportunities that much easier. And I think that we see this quite a bit on the African continent when we think about expanding to new markets and what it actually means from a financial perspective to move funds in and out of a market, right? What we would also like to explore on this panel, without giving away too much IP, is how we actually look at operationalizing this, right? Like subtle tweaks that you make to the financial operations, the effect that this has on your bottom line. And I think that I'm joined really by a group of incredibly esteemed panelists, and they're going to share a lot of insights with us. So I'm going to ask you all to introduce yourselves, and then we'll get into the conversation topics. Paulina, we'll start with you, and then head on down to Vincent. Sorry, I feel like there's so much space between us, so I'm gonna come a little bit closer.
My name is Paulina Klotzbücher. I've been at Travelstart for 12 years, been multiple C roles, kind of the group chief commercial officer now, but we've recently spun off a new entity in the group called Glide, which is very much in line. Actually, it's partnered with MasterCard, so yeah. So we take payments so seriously, we've actually created our own fintech. So I'm CEO of that. So yeah, that's me.
Great to have you here, Paulina.
It's Clinton from Payat, business development lead. I look after our relationships with digital networks and our banks. And yeah, I've been at Payat for about 1.5 years now, so also fairly new to Cape Town. Just been staying here for about 1 year now, so really a great environment. But I've been around the block in payments, so worked at Nedbank, Bankserve, and a couple of other payment houses before that. So looking forward to chatting to you all today.
Hi everyone. Vincent, I'm the group executive for digital at MultiChoice. That spans pretty much all markets that we operate in, about 40 to 50 digital properties depending on what's going on, ranging from our core self-service platforms like MyDSTV and MyGoTV, apps, pretty much any kind of channel that you can engage with MultiChoice, and that also includes payments. I've also played various roles inside of the business over the past 5 years, kind of starting in the South African business, really looking at bootstrapping better customer experiences for self-service, and sort of moved into more kind of group role over the past 2 years. And my background is startup, media, telco, just always really focused on product and digital. Probably do business with a lot of people in this room in one way or another, so it's going to be good to during coffee.
Awesome. You guys can keep the mic there. Funny story, Vincent and I actually met ages ago in different lives for both of us, and he said that he's done business with a lot of this room. We didn't do business there, but but it's really good to have all of you on the panel, and I think even through the introductions, there's a large depth and breadth in this topic and what we could essentially discuss. Paulina, I actually want to start with you. I know the first thing that you mentioned was like spending a bit of time at Travelstart, and had gone through many different roles across the C-suite. I think we're chatting a little bit earlier, and you mentioned being the CMO, CCO, CEO of Glide now, which is a fintech business within Travelstart. When you think about that journey with regards to payments and some of the changes that you've seen across the digital payments landscape, what are some of the notable trends in that evolvement of money movement within the Travelstart business?
Well, firstly, I found that, so fintech is very similar to travel in the space that, in the way that a lot of the innovation happens on the consumer side. But then below that, there's this layer of really inept technology. So it was very interesting to kind of understand a little bit more on the fintech side that, it's really sitting on a layer of poop. So the really, and I keep wondering why new startups aren't focusing more on actually changing the very fundamentals in the payment space. And I think what I'm excited about is in the last few years, that's exactly what's happening now. I think a lot of guys are coming out and coming in with technologies that solve the fundamental problems rather than simplifying and adding a new layer on top of the foundation, which is kind of rickety. So that's been some of the changes from a structural point of view. But
okay, I think we're good to go. So my second hello. Hi everyone, it's Grant. And I had a business development here at Stitch, and I'm excited to chat to you and really explore the topic of
now buy now, pay later is kind of shooting through the roof, as you mentioned. It's going to be interesting to see again how the National Credit Act takes that on. So it'll be interesting to see those evolutions. Does it actually stay a hard payment method into the future? So I think there's always a new hot payment method, but I think fundamentally our split, at least from a travel perspective, has maintained pretty solid 90% card. So there has been movements, but the fundamentals have stayed card-based, and I think a lot of that speaks to the fact that card provides certain insurances, etc., which are required for the high basket values that we support. But yeah.
I think interesting. I know when you and I were chatting before this, you had mentioned also nuances in what it looks like from a South African and then African perspective, because obviously you operate across the continent. Could you share a little bit of that insight?
Yeah, no, absolutely. So, between all the markets that we were in, and we were in Middle East, we were in Nigeria, in Kenya, I think at one stage we had 12 payment gateways. Actually more than that, because at one stage we were in Turkey, and that alone had like 6 payment gateways because it needed to support installments. So that was a cluster. But in the other markets, I think card adoption, we've seen a lot of that, like Middle East with Saudi opening up and starting to move to a digital form of payment. That was really interesting. Things are moving all away from cash, which is great, because back in the day, I've been there so long that I remember this. We actually had a guy with a scooter that collected cash. So we're glad that those days are behind us. We want to move away from that. Yeah, we had a dude. We had a dude on a scooter. Yeah, so there was a cash dude. So that was in Nigeria. It worked really badly. So I will not advise that to absolutely anyone in this room. Do not go with that route. But yeah, so we've noticed, what's great to see is just the huge amount of card adoption and instant EFT. I'm going to punt this as well, because we've recently implemented instant EFT in Nigeria, and we've seen quite a strong adoption on that, which obviously helps us with automation and processing. No one wants to have another dude processing EFT files and doing recons. So
and I guess it's way better than a dude on a scooter.
Yeah, it's way better. There's always a dude, though. We're trying to get rid of the dude. But
speaking on the dude on the scooter, because obviously it's around digitizing payments, right? And that's why it's better. There's also a risk involved in carrying money like that. Vincent, we were chatting, and we were chatting around essentially multi-choices, payment integrations across the continent, and thinking about digital payments. I think you said something like over 350 different payment integrations, and given the reach that the MultiChoice group has across the continent, how do you think about centralizing a lot of these payment flows and essentially building these processes?
That's a great question. Like we don't have dudes on scooters. We have guys in flip-flops, guys in Nikes walking around on the ground, right? We have a massive network of physical cash collection inside of the markets. And it's an ongoing sort of task in my space to try and migrate those cash payers across into digital. In a business, so our business has relative scale. I mean, we've got 22 million paying customers.
Yeah.
We're growing every year, and in rest of Africa, it's getting to the point now where when you do something that moves ARPU by 1%, it's a big number. And what we found is that if we take someone and we migrate them from paying cash to paying digitally, on average, their ARPU bumps up by 10 to 14%, which is massive for us, right? So that gives us room to, as you say, we've got a lot of payment options. It gives us room to negotiate there, and sometimes to not necessarily be the most efficient from a cost perspective in order to do that migration.
Yeah.
And we've done some interesting things. I think we're the first non-banking business to do USSD payments in Ethiopia. So we're like really kind of reaching deep into the continent and looking at who are the local payment providers there that have loyal customers who really they'll either pay cash or that one other thing that's digital. We find that thing and we do it. So in terms of operationalizing, it's complicated, right? Because we've got 14 businesses in the markets, and then obviously we service about 50 markets in sub-Saharan Africa. So, coordinating all of that, having a game plan, making sure that you have lined up all your resourcing to actually do the integrations, test them, make sure that they're running all the time, means like we have a deep obsession with analytics.
Yeah.
You just can't not have that, right?
Yeah.
And you need people that live and breathe by, is this payment channel delivering the right throughput at the right success rate, etc., every single minute of the day. So that's, it's a big task, but also big rewards if you get it right. And I guess one other point is we have a different operating model in the rest of Africa to South Africa. So in South Africa, we work with Payat, and they do everything for us, and they make our lives very easy. Also work with you guys, and that's imminent. Whereas in the rest of Africa, like we're doing the grind there ourselves a lot of the time, right? So like our own engineering teams are doing those integrations.
So working with providers or partners one-to-one.
Yeah. So often direct. I mean, in the Ethiopia case, we had to get a network cable between one place and another in order to be allowed to do what we're doing, right? Like, so like an actual cable with some redundancy. So I just want to kind of comment on that. The one model is easy for us, and we have a partner, and they do all the hard work, and that's really great. But we appreciate it more because we're doing the other thing ourselves, right? So, and I think you've always got to put yourself on both sides of the fence when you're doing these things, just to understand the problems that your partners in your supply chain are facing on a day-to-day basis.
Yeah, I think I love what you're saying around contextualizing payments within a local landscape. And I think I heard a comment from the audience when you said a cable, saying like it's the equivalent of a digital dude on a scooter. But
yeah, exactly.
But coming to you, Clinton, and thinking about this contextualizing payments, right? I think Payat's doing a lot of work across both online payments as well as in-store payments, right? Yesterday when I was chatting to Clinton and we were preparing for this panel, I said offline payments, and he quickly corrected me. But would love to actually explore that, because like some of the model that you guys operate is essentially digitizing cash, right? So allowing people to participate in the digital economy, even if they are unbanked, right?
Yeah, 100%. I mean, cash is not going away anytime soon. we'll see the impact that RPP has on the market, but cash is still king. I mean, with our retail partners, we still see cash growing quite strongly, probably just as much in line with digital growth in any event. And I mean, it's a trust factor that people have in terms of using cash to go make that payment. And yeah, it's growing, not going away. And I think MultiChoice can attest in South Africa, it's quite a different market to the rest of Africa when it comes to cash as well. A lot of the lower end consumers just prefer to use cash to make those payments, and it's convenient for them when they're doing their shopping. But knowing this as well, we are expanding obviously into the digital space, and that's growing pretty well as well. But we've converged also what we're doing in digital with having access to do retail payments as well. So when you get your bill for MultiChoice and it comes through and you scan the QR code or you go to the MultiChoice website, not only can you pay then and there with card or using instant EFT, you can also then go present a barcode directly into the retailer to go make a payment there as well. So you have to make it as easy as possible for customers to do that payment, because ultimately a bill payment is almost like a grudge purchase. It's not like you doing e-commerce and you're waiting for these goods or new shoes to come along. It's sort of like, I got to pay my insurance or I got to pay my municipal bill.
There's natural friction.
So you got to make it as easy as possible, have many networks as possible. And yeah, it's really, really important. I mean, it's what we like about Stitch, so I've got to punch you guys. That the journey that you've created in terms of what we had previously from an instant EFT journey with another provider to what you guys have brought along is really day and night. So it's really quite awesome, and we're seeing great growth.
Thanks. Yeah, thanks for trusting us as well. I think on that, like one of the thoughts that like we were exploring when we were also chatting about this is, like, do you think or do you see a world in which we would move away from cash? And like bigger picture thinking, what would be the impetus if we were to move away from cash?
So, I mean, it would be great if cash wasn't there. I think it would solve a lot of things with security and help the economy a lot. But I don't think from a regulatory aspect the appetite's 100% there. So cash is still going to continue to grow. We'll see how RPP plays out, and it may solve for some of the domestic remittances. Whether the retailers are keen on doing that, don't shoot me on that. And whether they want to play with it would be interesting to see as well. But I think it could cannibalize a lot of what's happening in the normal digital space rather than eating into cash. I mean, you still got to digitize the cash. You still got to leverage what the networks the retailers have before you can move anything digitally for that market.
Yeah, I think staying on the topic of digitizing and digital payments, I'm going to come back to you, Paulina. What have you seen consumers demanding from a digital payments perspective? So I think you mentioned a little bit earlier some of the trends were initially around e-bucks, like trends now around buy now, pay later. Like, what have you seen over the past 5 years or so? And as Travelstart, how do you, like, in the context of these trends coming and going, essentially look to cater for these when consumers are demanding them?
Well, I think sometimes it's nice to offer a whole suite of payment methods just because people feel more confident on the checkout page to then make their final decision. I mean, we partner, I mean, and it's also, it depends on the different audience, the different sector. I mean, we work with Payat for our bus. Sorry, that was a very bad slip of the tongue.
I didn't hear anything.
One's an A, one's an E.
So we work with Payat for our bus vertical. So, you know, their people are confident to, you know, go to the Pick and Pay and pay for their bus ticket after they've booked it online. So there are different audiences, and everyone has a different kind of appetite for a different form of payment. I mean, my mother prefers to pay with EFT. You know, I prefer to pay with card. But there are certain like funky payment methods that do come out, like, you know, the different tokens, etc. And because there's less interoperability between them, you know, yes, if someone's like obsessed with e-bucks, then they want to use them and burn them. But I find that they never really have that massive adoption. So it's like, yes, it's kind of speaking to what you spoke about, you know, yes, you want to grab, it's all incremental gains, right? So you're going to add this additional payment method to just grab that additional like
1% or 0.5%. So you're kind of slicing up, but the bulk is still the main forms of payment. I do disagree, though, about cash. I think cash is going to change its form. I think, whipping out, crumpled 20 Rand notes at one stage is going to go away. I don't know how many people actually here have actually even cash in their wallet. I don't know how many times, I've even paid for parking attendants now have SnapScan codes hanging around their neck, which is insane. I had someone begging on the corner, and they had a SnapScan code. I was like, dude, you are so getting money. I'm SnapScanning you. I'm giving you cash. This is amazing. People ask for stuff, and also surveys and stuff are usually like so bullshitty because people always like, oh yes, I want this form of payment. I'll definitely pay with that. It's like, no, you won't. You want stuff. It's kind of like when you go into a shop and you're like, I will definitely wear those insanely uncomfortable shoes, and you bring them home and they're in your cupboard because you're wearing sweatpants. There's what you think you want and what you really want. Being a woman, I really understand this. So yeah.
I think that's actually an interesting point. I'd love to do like a quick audience poll. So who carries cash here? You can just put your hand up.
Okay, you can see there's like a division. That side of the room. That side of the room is not. So there's a clear line.
We're going to be splitting the room a little bit later, so I think it'll become a little bit clearer. So I think thinking about these complexities. So Vincent, coming to you, you guys obviously handle like huge volumes of payments across the continent, right? And like I'd imagine that there's lots of complexity covering like the different channels. What do you guys actually look to prioritize, like both from a payments operations perspective and then an experience perspective, right? Like experience for that end user.
I think, well, let me start with experience. The point around customer centricity earlier, that it's an already emerged trend. I find daily that certainly in large corporations, that isn't emerged yet, right? And so the battle is, how do you get everybody in a set of teams that are in functional silos to work together around one customer journey and get a good outcome there? And what we found gradually over the past few years, sort of pivoting towards a model where, we may be dropping some, I guess, of the sort of old school KPIs, ways of running corporates into like more OKRs and different kind of agile ways of thinking about customer and product. Is you get, what we found is what customers really want is choice, and they want control, right? The thing that freaks a lot of our customers out about debit orders is that they don't really have control on the day. And if you're in a situation where your bank account is a little bit like, it's kind of variable what's going on in there depending on what your work situation is. The day that thing happens, you may not have that money, right? And it causes a lot of anxiety for people, especially in the mass market.
Yeah.
Which explains why maybe they're still stuck on cash as a choice, because it's fundamentally a way to express control over what you do with that money at the time. So organizing around that from a product and journey perspective has been really important. And that's why when we go into a new market, we spend quite a lot of time there talking to people about, what do they do with their money? How do they like to pay? If it's a recurring bill, do they have a different preference to say something that's one-off? And often you find that, and often depending on how people are getting paid in a country, will determine how they prefer to pay as well, right? So there's all of that. From an ops point of view, you sort of have to organize around. I guess a lot of the stuff for us is set up and it runs automatically, and we don't have to worry about it. We just sort of have to monitor it and make sure that from an escalation path perspective, if a particular piece breaks, we know about it really, really quickly and get the right escalations. But you'd be surprised how, we've had payment methods that have been offline for weeks, right? It can be quite chaotic out there. And you've just sort of got to be quite resilient, I think, when you're dealing with a continent that's so not homogenous, right? There's so many different ways to do business in Africa, and different expectations from customers and people, and their life situations and outlooks are very different as well. So you've got to you've got to sort of surrender a little bit of, you know, that uptight South African vibe about everything must be on time, etc., and just sort of settle into the fact that you're running a marathon, not a sprint. You know, and when we onboard new people and we say to them, listen, your life is going to be about making sure that, like, we're accepting this kind of payment all the time. We sort of say to them, look, like, check in for shrink counseling every 3 weeks because you're going to need it, right? but just zoom out and go, we've got 100,000 customers there and they're all paying mostly on time and they're happy, and that's what you have to be centered around.
Yeah, I think that's definitely one of the complexities about the continent, right? Because Africa is not a country. It's made up of like many different countries with many different people, like nuances in each market, and it makes it like a beautiful place to do business in, but also a very, very difficult business environment, right? I think like there was this saying that one of my friends who moved to the Middle East, and he said, if you can make it in Africa, you can make it anywhere.
Absolutely. And you know what I find really fascinating is we have better digital adoption of payments in Africa than we do in South Africa. So that speaks to how well established things are here and how difficult it is to change people's behavior, right? And often those open spaces are the best ones to go in because people don't have a preconceived idea on how to do things.
Yeah. Clinton, I think coming to you on this, so you've also got a history in banking, at Payat as well, within the payment space. How essentially have you seen that digital payments experience evolve? And what are some of the things that you guys think about at Payat in line with this?
So look, the main thing with the digital payments experience is it's really around two factors. It's around that customer experience, making it as seamless as possible, and the security. I mean, South Africa, we do see a lot of fraud, particularly around card transactions and that taking place. People get phished. And actually people get phished on the card side, plus on the other side where the funds are being received as well. So, I mean, those are the important elements you have to think about. So you have to really know and work with partners who know who their customers are that are making those payments, where the money's going as well in terms of AML. And that is actually quite tricky to do in the context of South Africa. The banks are even battling and grasping with some of these issues as well. And I think that's going to be an interesting play to see how that plays out with a lot of what we're seeing in digital payments. I mean, we see people who have got cards in their wallet, 3D Secure enabled, but they prefer to use other payment methods because they've had fraud go on their card previously. And I think the banks aren't doing enough to help protect those customers in terms of those flows. I think the new 3D Secure version 2 that's coming out, I think has come out, will go a long way to helping some of those flows as well with card. But fraud is a big issue, and that's also why you see people go into the retailers to make those payments as well.
Yeah.
And it's around that trust factor. The retailers will know as well that they get people come into a retailer, withdraw all the cash out their account, then count that money, and then put it back into the account. I mean, there's that whole trust factor around, am I actually getting the value that's indicated in the bank account? Am I being defrauded somewhere?
Yeah.
So, yeah, those two items really, really key to solve. So fraud and that customer journey in the digital space.
Yeah, I think thinking about that, right, maybe looking at this a little bit differently. So, Paulina, we're speaking about better money movement to enable businesses to scale faster, but we just had a period through like the lockdowns and COVID-19 where like, travel couldn't scale, right?
Yeah.
And payments across travel couldn't scale. So how did you guys think about payments? Like, what was the look of the landscape? Obviously, lots of reversals happening at this point. And
That's fun time. Yeah, no, great. There's nothing more fun than having, oh, wow, what's happening here? I feel like I'm louder. Sorry, I'm slouching. So now it's off. Is it on?
No, it's on now.
So basically, I'll just talk louder. Okay. So it's nothing more fun than basically having more money coming out than coming in. So, you know, travel industry, you can imagine it was really fun. 2 years of basically people doing chargebacks against their cards, demanding refunds, while at the same time, one forgets that we weren't sitting with the money. We had paid the airlines, and the airlines were like, well, we don't have any money, because airlines actually spend the money before you depart. So yeah, that was a really fun time. It's like, well, we don't have the cash, and we're like, yeah, but we have to pay those other guys back. So it was a great process. Yeah, it was really painful. Luckily, I must admit, the card schemes did really support us in terms of just as an entire industry globally, you know, trying to, you know, push back against chargebacks, saying, look, in this case, you know, vouchers should be accepted, even if, you know, you can't provide the service, etc. So there was a lot of support globally around that. And I think people generally were also a lot more understanding than we had ever anticipated. Obviously, after about a year, the understanding went downhill a little bit. But, you know, at the beginning, you know, there, you know, people were, I was actually surprised what a support we got from everyone. But yeah, it was a very difficult time, and this is where actually payment by EFT, etc., was really to our benefit, because where we could control, and that kind of speaks to what you're saying around control of funds, etc., we were able to say, we're not going to pay you back until we get the money back from the airline, as opposed to getting a chargeback claim against us. Because remember, we're sitting at this little man in the middle, collecting money from consumers and then paying suppliers. So yeah, it was a difficult time. I think, you know, considering the fact that we're a low margin business, you know, on air tickets, while at the same time it's high volume and high value. So like back in 2019, the TLG group processed in excess of $1 billion, which is nothing for MultiChoice. I know they're like, this is a Monday. Okay, but, for, you know, so I'm like, oh, it's $1 billion with a B. But yeah. Yeah, the reversal flow was also brilliant, so that was great fun. But yeah, so, yeah, I kind of lost my track of thought. What was the question again?
We do respect $1 billion. Like we
Thank
consider
you,
that
thank
to be a
you.
decent amount.
Time to retort. Okay, so I think like actually coming to you, Vincent, because like one of the things that I wanted to just understand. Obviously, MultiChoice is now a huge business, I mean, 350 plus payment integrations across the continent, working directly in many markets, looking to contextualize. How are payments viewed generally and prioritized within the MultiChoice business? And like, how do you think about that inclusivity of methods when moving into new markets?
So it's a very high priority. I mean, we're still predominantly a subscription business, right? So we're slowly pivoting into more of a subscription platform business where we're offering a lot of other things other than entertainment. So as and when we add different types of products, the way that we think about payments and how we take payments changes, right? So, I mean, most recently we launched our fiber internet product that gets bundled with entertainment, but also for about a year now, we've been selling FLTE internet. And the way that you charge and manage those payments is different to, say, your DSTV subscription or your GoTV subscription. So, you know, when we're busy doing product development planning, that kind of thing, how we do payments is a critical piece of it. What's increasingly becoming a factor is how we align our marketing automation systems with our payments data and our payments history, right? Because increasingly the way that you communicate with a person in and around when they need to pay plays a very strong role in whether or not they do that kind of the same day or they wait 3 days and you lose them for that 3-day period, etc. So we're doing a lot of thinking around, you know, the subscription management and the payment is sort of at the core, but then all the comms and integration that happens around it to make that customer experience seem quite personal and seamless are very important. So it's like right there at the top of our priority list.
Is this including for subscription payments, right? Where like it's a tokenized subscription payment and it just happens at that point in a month?
Yeah, so we've got prepaid, we've got postpaid, we've got people that will pay for a particular amount of data, for example. So it's all different things. So if you just on a regular subscription payment, then you don't want to be spamming someone that their payment's coming up, because it's an automatic thing and they don't need to be reminded about it all the time. You just need to tell them that it went well when it happened, right? Whereas if someone has something that's going to expire tomorrow, and if they don't pay today, you actually lose them as a customer for a couple of days. That's where we get big ARPU growth by switching people to digital. Because if you've got to walk 20 Ks to go pay cash, it's a problem, right? And it may not be convenient on the day, you know, of your sort of recurring thing. So yeah, I mean, obviously you would think that payments would be super central. The nice thing is once you have a market mostly kind of catered for, you don't have to worry about it that much, and you really start focusing on customer experience around it. You know, we don't sit and like tweak that as much as maybe you would think. I don't know if the pay-at guys spend all their lives tweaking on our behalf. Maybe you can jump in on that, but shot for that if you do.
We make it nice and easy. You don't even know what's happening. Yeah.
I think one question I do want to follow on, because it's something that we haven't discussed, and I definitely spoke about it initially from like pay-ins, payouts, and cross-border. And there's a lot of talk around cryptocurrency, stablecoin, actually being used for cross-border payments. And knowing that you guys operate across multiple markets, like what are your general thoughts around this?
So we're actively looking at it. We're busy monitoring the regulatory space, the tax space, etc. I think that pretty soon we're going to have a POC in market for crypto payments in some form or another, most likely stablecoin. But in other areas, we're quite seriously looking at the NFT space as well, right? So it's not just around crypto payments, but also around tokenizing content on the blockchain. And you would imagine, given how much original content we create, there's a massive opportunity to create digital collectibles, all that kind of stuff on the back of that. And with that then comes, you know, if you're doing NFT collectibles, then you have a whole different usability journey around crypto payments and potentially doing cash payments for crypto, that, you know, you're kind of taking through multiple steps of conversion to get to the actual thing. But it's something that kind of is a topic in our meetings pretty regularly at the moment. So we're definitely going to do something soon.
That's exciting. That's definitely exciting. I think, Clinton, coming to you, and I'll wrap up with this question, and then we'll open up to some questions from the audience. But some of the customers that you serve are certainly in the lower income segment, right? How do you think about enabling exclusivity and essentially letting more South Africans pay through digital transactions? And what is the impact that innovations like Instant EFT have had through this experience as well?
Yeah, I mean, it's we obviously, as consumers, need to have as many options available to make payments, and the digital payment methods are absolutely key in having that as well, to be able to pay their bills, doesn't matter which segment of the market that's in. But again, it goes to making it as easy as possible, so combining digital with the ability to do face-to-face transactions as well, so presenting it like through a barcode to make it easier to pay in retail, but also then working with the retailers as well to see how you can digitize some of their flows as well. I mean, a lot of us are ordering our groceries through the retailer apps. And how do you then pay your bill at that same point as well? To me, that's obviously would be a great experience as well, to get those type of flows going. And then, I mean, on the Instant EFT, we've seen fantastic growth on Instant EFT over the last couple of years. It's one of our largest payment methods in the digital space. And again, it's just the great journeys customers have around it and the trust that they see when using the Instant EFT flows. I think it's a very exciting space to be in. And yeah, I think the banks lost a bit of an opportunity there in that space with not catering to what customers really wanted and what merchants wanted in the digital space. But it'll be interesting to see how things like open banking play out with what the banks are doing, how RPP will play out in the next couple of years as well, whether that moves into person-to-business payments, because I mean initially it's going to be really P2P type payments, low value. I think would be interesting to see. I'm sure Pauline would like instant movement of funds for travel bookings and that as well.
Especially out of Nigeria. Yes, if you have a solution, I'm all ears.
So yeah, it'll be very interesting to see how it plays out over the next couple of years. But again, you just have to have all the payment methods regardless of what the customer wants, how they want to pay and when they want to pay it.
Yeah. I think just final question from me, and it's for all panelists, but do you see majority of digital payments happening across desktop or mobile? Like, which is the larger majority?
We're actually 60% mobile.
Yeah, majority mobile as well in the digital space.
We're at 85% mobile.
Interesting. Awesome. Thanks so much. I think what we do want to do is to give the audience a chance to ask a few questions. So yeah, some Q&A. I think the floor's open, and you can just put your hand up, and we'll bring a mic over to you.
Any questions, guys?
It's always the case in every panel. It's like everyone's like shy.
So mine is for Vincent. So you mentioned in Rwanda you've got a payment aggregator there that you use, but in a lot of obviously other markets you've kind of built your own integrations. Obviously payment collection is such a key part of your business. How do you make the decision around working with kind of payment aggregators or doing it yourselves, particularly in markets where payment infrastructure is not as well established?
So I guess there are a couple of factors, right? It comes down to, firstly, what is that aggregator's reach in the market from options and payment, I guess, payment paths perspective. The other tends to come down to a commercial discussion around how that's going to work in terms of fees and so on, service levels and that kind of thing. I think, you know, what we've tended to find is if we find a partner that has got some great aggregation, we'll just go that route initially and then see how that goes. And then if it's not working, then we start evaluating whether we need to go direct or not. A lot of the time, though, we want some kind of obscure things that no one else has bothered with, so then we sort of have to go in and do it ourselves. So there's kind of, I suppose, we use friction as the way to determine which one we're going to go with. And there have been some cases where we've taken a higher friction option just because we, you know, kind of there's more trust or there's more reason long term to do it strategically ourselves than to go through a partner. And surprisingly, sometimes from an aggregation perspective, our priorities are not the same as the aggregators in terms of their roadmap. So, you know, they'll be dealing with, say, more strictly e-commerce and subscription payments, so they'll have a different way of looking at the market that says they're going to do these 5 partners before our one comes up. And that just, yeah, so there's no, I wouldn't say like we've got a playbook exactly around how to do that. You know, it often is quite circumstantial how those decisions get made. It's in South Africa that we have the one aggregator, not in Rwanda.
Hi, my question is for all 3 of you. So what role do you think data plays in digital payment? We spoke about mobile payments, digital payments, and we also spoke about e-bucks. So I'm coming from tying in payments with loyalty and data. How do you think all 3 ties together for a consumer to accept payments digitally?
Who do you want to start?
We'll start with you, Paulina.
Okay, well, actually, just looking at our data is the reason we started a fintech division. Because, you know, we're obviously looking to optimize our cost base. So, you know, we're constantly looking at how we can decrease that. So yeah, I mean, I think data's become fundamental now in pretty much every decision anyone makes in anything. So, you know, otherwise it's just called an opinion. So yeah, it's a flaky answer, but yeah, it's, I'll hand over.
Sorry, it was more around the cost of data for the consumers, not
The cost of data for the
Yeah,
consumers.
So
Like-
the cost of mobile data.
mobile
Oh,
data.
cost of
Yeah.
mobile data for consumers. Oh, okay. Well, I mean, our site isn't, that's probably more for the MultiChoice guys. From our side, I mean, we don't, we have a very light site from, we actually got investment from MTN, so we wanted to get our site back in the day 0 rated, but I mean, that didn't really give any additional benefit. I mean, if you can afford a ticket cross-border, dude, you should probably be able to afford a couple of bits of data, especially if anyone's bought a ticket recently overseas. I mean, it's like, yeah. So from our side, it's not really such a, it's, you know, optimizing, you know, load of the site is not really, it's not really a thing that we focus on. It's, yeah, it's a non-issue for us, but for the media guys, I'm sure it is.
Yeah, I'd imagine pay at MultiChoice, it's a consideration, right?
Yeah, so in terms of what we present on our payment pages, we've reduced it down from a size perspective to make it as lightweight as possible when used on a mobile device as well. But I mean, a lot of the payment methods obviously are also don't have a cost in the digital space if it's linking directly into banking apps or things like that as well. So, but it is an issue. But I think the telcos have probably done a lot of work there around helping those costs. I mean, you can get airtime advances these days. You can get whole day packages as well to help people then go through the day. So, but again, you've got to take cognizance that these are small amounts that are moving in that as well, that people have got to figure out how they're going to pay as well. But I think we're moving there, but data has always been a big challenge.
Yeah, for us, I guess if you split it between payments and service versus actually consuming the product, it's different. On the payment side, it's sort of gone off our list of things to worry about. I think South Africa is probably the last place where people are worrying about data costs now. We're still sort of indexing higher than anywhere else on the continent from a mobile data perspective. But you know, obviously we're always trying to optimize, etc., because it's actually for us less about the data cost than the speed and responsiveness of the service, and those two things kind of go hand in hand. So you know, there's never a time when we don't have some program on to do mobile optimization. But then on the streaming side, obviously it's a massive factor, right? For Showmax, for DSTV streaming. You know, and there we're out actively sort of doing deals with telcos and ISPs to bundle entertainment product plus an amount of data that, you know, is kind of more optimal for a streaming product. But I do think that, you know, data costs have to drop a little bit more before I think a lot of people are going to be streaming in the sort of middle and mass market, you know, as frequently as maybe we in this room would do. So it's a factor, and I guess the other thing that's great is video codecs are always improving in terms of the efficiency of the codecs, right? So on the one hand you get decreasing data costs, but then you also get decreasing data utilization through the codec, especially for mobile. You know, you can get a decent amount of viewing for fairly low data these days, which maybe 5 years ago, you know, you would have watched 10 minutes for a gig or something like that. It's like quite different now.
Hi. My name is James Headley. I'm from Quicket, the ticketing company. I have a question for Paulina. Yeah, I mean, coming from ticketing, I've seen how expensive processing cards can be. And I would imagine that Travelstart spends an absolute fortune on card fees, in particular cross-border card fees. So I'm just interested to find out what you guys do to try and reduce that cost.
Okay, so yes, firstly, we try and pass on the cost to the airline and the provider as much as possible, but we're still carrying a pretty hefty fee in terms of, I mean, that's pretty much in travel generally. So firstly, we acquire locally in most markets, and we focus on, so we don't have as much cross-border transactions, as in people coming in with overseas cards and having an international card being processed. So, and when we do, we process that against another entity. So we can identify what card it is at the time of payment, and we did a lot of payment orchestration work to ensure that we're acquiring at the lowest possible cost. And then because we have so many different entities globally, we're able to settle the funds in the correct entity. So that might be a little borderline on the legality side, so we'll keep that between us and the people in the room here. Yeah, that's standard payment orchestration, so yeah. That's what we do. But yeah, the costs are really, really high. And that is one of the reasons we've got a partnership with MasterCard, because they like the fact that we spend so much on card. So we get a lot of flirt action from that side. So yeah, we try and see if we can collect and then settle our suppliers with another card, see if we can make a little bit of money there to offset the acquiring costs. But yeah, it's with high basket values, low margins, FX issues. I mean, with airlines, you don't actually know, but they acquire locally and then they settle the funds with an EFT cross-border several days later. So especially now with the FX movements being like insane, you can understand how airlines are really struggling. Not to mention, I mean, it's like insane. SWIFT. I mean, like, that's just the topic on itself. One day someone needs to do a SWIFT conference. I mean, it's like, dude, really, it's like the 70s.
Next
and we're
panel.
like, yeah, that one you should really do. Okay. So I don't know. I hope I answered your question sort of, but yeah, basically you need a lot of entities and acquire around the right one with the right gateway, so there's local acquiring as much as possible.